Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are up today. Dow Jones is up 0.5%, Nasdaq is up 1%, S&P 500 is up 0.8%, Russell 2000 is up 0.4%. Oil is down below $64 per barrel. Yield curve is up several basis points. 10-year Treasury yields at 4.29. No economic releases today. Apple is driving the markets higher today. Apple up another 4% today. Tesla is up 2%. Google is up 2%. Financials are up across the board. Software is mixed. Everything else is mixed. Wall Street gains with tech rate cut expectations. US stocks were higher on Friday as technology shares, including Apple, gained as investors were optimistic about expectations for a rate cut this year. The three major indices were also on track for solid gains for the week. Apple shares climbed 5%, adding to recent gains. Earlier this week, US President Trump said Apple would invest an additional $100 billion in the US, bringing its total commitment to $600 billion over the next 4 years. The S&P 500 Technology Index rose 1%. Also helping the S&P 500, shares of Gilead rose 8% after it raised its full-year financial outlook. The president late in Thursday's session nominated Council of Economic Advisors Chair Stephen Miran to a short-term board seat following Adriana Kugler's abrupt exit last week, as he narrowed his shortlist to succeed Fed Chair Powell, whose term ends May 15. Miran, who is often aligned with Trump, has previously suggested Powell was too late in lowering rates. Traders now peg about 90% chance of a first rate cut hitting next month, according to CME Group's FedWatch tool, with futures pointing to at least 2 cuts by year-end. There are certainly investors who think if the Fed is going to cut rates, then the overarching theme is don't fight the Fed on lower rates, said Rick Meckler, partner at Chair Lane Investments, a family investment office in New Vernon, New Jersey. The other side of the equation has really been the tariffs, and how the tariffs turn out remains uncertain. They are still being negotiated, and I don't think too many people want to short knowing there could be quick reversals on any of the tariff decisions that now seem problematic. Trump's higher tariffs on imports from dozens of countries kicked in this week. Investors also monitored U.S.-India trade tensions relations as New Delhi shelved fresh U.S. arms and aircraft purchases, according to 3 Indian officials, after Trump hiked tariffs on Indian exports to 50% this week. Shares of Expedia rose 3% after the company raised its annual forecast for gross bookings and revenue growth. Advancing issues outnumbered decliners by 1.1 to 1 ratio on the NYSE. Let's move on to Tesla news. Tesla disbands Dojo supercomputer team, unwinding key AI effort. Tesla is disbanding its Dojo team under its leader, will leave the company. According to people familiar with the matter, pending the automaker's effort to build an in-house supercomputer for developing driverless vehicle technology. This is a huge loss for Tesla. Pete Bannon, who was heading up Dojo, is leaving, and CEO Elon Musk has ordered the effort to be shut down, according to the people, who asked not to be identified, discussing internal matters. The team has lost about 20 workers recently to newly formed Destiny AI, and remaining Dojo workers are being reassigned to other data center and compute projects within Tesla, the people said. Tesla plans to increase its reliance on external technology partners, including NVIDIA Corp, AMD for compute, and Samsung for chip manufacturing, people said. Musk's order marks a major shift for a program years in the making, with Dojo once positioned as central to Tesla's multi-billion-dollar effort to pull ahead in the AI race. Tesla and Bannon did not respond to requests for comment. After Bloomberg News first reported the developments, Musk confirmed Tesla's change in approach, writing on X that the next-gen AI chips going into companies' vehicles will be excellent for inference and at least pretty good for training. All effort is focused on that. Tesla shares rebounded after a slight decline overnight, rising 2%. The stock had fallen 20% this year through Thursday's close. Dojo is a Tesla-designed supercomputer used to train the machine learning models behind the electric vehicle makers' autopilot and FSD systems, as well as Optimus humanoid robot. It's based on a custom in-house chip known as D1 and was meant to be used in training AI models. The computer takes NVIDIA data, etc., vehicles, and rapidly processes into the improved company's algorithms. Analysts said Dojo could be a key competitive advantage, with Morgan Stanley estimating in 2023 that it could eventually add $500 billion to Tesla's market value. Density AI, which is poised to come out of stealth soon, is working on chips, hardware, and software that will power data centers for AI that are used in robotics by AI agents and for automotive applications, among other sectors, Bloomberg reported this week. The company was founded by Ganesh, the former head of Dojo, and ex-Tesla employees Bill Chang and Ben Forlerin. Tesla Model Y L and Model 3 Plus ranges revealed in China. Tesla Model Y L, a longer and higher variant of the Model Y, has a 751 kilometer CLTC cruising range and 82 kilowatt-hour batteries. The Tesla Model 3 Plus, with a 225 kilowatt rear electric motor, offers 830 kilometers and 800 kilometers CLTC cruising ranges and 78.4 kilowatt hours of batteries. Both models are expected to launch in China in September with starting prices of 270,000 yuan. And like I mentioned earlier, I think Chinese vehicles, the new Chinese vehicles, already go further for cheaper. So I don't think these vehicles are going to do well. I think Tesla's Model Y phase is winding down. OpenAI priced GPT-5 so low it may spark a price war. OpenAI, a company that's making actual progress on technology, astounded the tech industry for the second time this week by launching its newest flagship model, GPT-5, just days after releasing two new freely available models under an open source license. OpenAI CEO Sam Altman went so far as to call GPT-5 the best model in the world. That may be pride or hyperbole, as TechCrunch's Maxwell Zeff reports that GPT-5 only slightly outperforms other leading AI models from Anthropic, Google DeepMind, and XAI on some key benchmarks and slightly lags on others. Still, it's a model that performs well for a wide variety of users, particularly coding. And as Altman pointed out, one area where it's undoubtedly competing well is price. Very happy with the pricing as we are able to deliver, he tweeted. The top-level GPT-5 API costs $1.25 per 1 million tokens of input and $10 per 1 million tokens of output. This pricing mirrors Google Gemini 2.5 Pro basic subscription, which is also popular for coding-related tasks. Google, however, charges more if inputs-outputs costs cross a heavy threshold of 200,000 prompts, meaning its most consumption-heavy customers end up paying more. But OpenAI is really undercutting Anthropic's Cloud Opus 4.1, which starts at $15 per 1 million input tokens and $75 per 1 million output tokens. Anthropic does, however, offer big discounts for prompt caching and batch processing, storing, reusing prompts, and processing multiple requests together. Anthropic's model has been extremely popular among programmers, both as a choice within popular coding assistant Cursor and powering its own such assistant, Cloud Code. Note that Cursor offered GPT-5 as an option minutes after it was announced. Developers who have had already access to GPT-5 are touting its pricing. Simon Willison, one of the developers featured in OpenAI's launch video, writes in his review, the pricing is aggressively competitive with other providers. But GPT-5 is also priced competitively with GPT-4o. Other AI co-founder and CEO Matt Schumer writes that GPT-5 is cheaper than GPT-4o, which is fantastic. Intelligence per dollar continues to increase. Some on X called OpenAI's fees the model a pricing killer, while others on Hacker News are offering similar praise. Will competitors like Anthropic follow? Will Google, who undercut OpenAI on pricing before, get even more affordable? Probably. If so, we could be witnessing the start of a much-awaited LLM price war. There is no doubt a price war would be welcome. The underlying economics of vibe coding tool providers, for instance, is pretty shaky because of the high and unpredictable fees they have to pay model makers, as TechCrunch's Marina Temkin reports. And there are countless startups building on top of AI models as well. SoftBank, OpenAI's financier, reportedly bought Foxconn's Ohio factory for the Stargate AI project. The mystery buyer of the former GM factory owned by Foxconn in Lawson, Ohio is apparently SoftBank. According to Bloomberg News, SoftBank wants to use the factory to build AI servers as part of the Stargate data center project being spearheaded by the Japanese conglomerate OpenAI and Oracle. Now, switching to Fed news. Any questions, comments, please leave a comment. Fed's Musalem, there are risks now to both the inflation and jobs goals. The Federal Reserve now faces risk to both its inflation and jobs goals, with policymakers needing to balance which seem the more serious threat. in deciding whether it's appropriate to reduce interest rates, St. Louis Fed President Alberto Musalem said on Friday. Between tariffs pushing up prices and jobs growth slowing, there are risks on both sides of our mandate. And when that happens, when you have risks on both sides, you have to take a balanced approach, which means you have to think about the likelihood of missing on each side of the mandate, the size of the potential miss, and how long that miss will be in place, Musalem said on an economic group in Mississippi. That's the balancing act that we're doing right now. Musalem, a voter on interest rate policy this year, did not say whether he feels the policy or rate of interest should be reduced at the Fed's September meeting. He voted in favor of keeping the policy rate steady last week. That meeting, however, was followed 2 days later by a jobs report that showed employment growth slowed in July and that far fewer jobs had been added in prior months than initially estimated. The unemployment rate rose. Musalem said he still felt there was a risk the Trump administration's new import tariffs could lead to persistent inflation, but that the Fed now had to guard against employment slowdown as well. A difficult situation for central bankers whose efforts to loosen or constrain the flow of credit in the economy can influence inflation and employment in opposing ways. It's likely that most of the impact on tariffs on inflation will be short-lived and will fade, but there's a reasonable probability that there may be some persistence, Musalem said. The labor market right now looks good, he said, but added that growth has been slower than potential for the first half of the year and is expected to continue along those lines for the second half of the year, and that poses risks to the labor market. Investors expect the Fed to cut rates by a quarter percentage point in September and again in December. 3 things you need to know about Trump's nominee for the Fed. President Trump's nominee for the Federal Reserve Board has implications for central banks' monetary policy decisions. The president nominated Council of Economic Advisor Chairman Stephen Miran to the Fed to replace Fed Governor Adriana Kugler, who is stepping down Friday. Miran holds that seat for a few months until the January 31 term expires, while the president looks for a different candidate to nominate for a full 14-year term as Fed governor. But how will nomination impact the central bank and the decision it makes on setting interest rates? Here are the 3 things you need to know. Miran wants lower interest rates. Miran, who criticized the Fed last fall for cutting rates, warning that lower rates could perpetuate inflation further, is now in favor of cutting rates. Miran, who holds a PhD in economics from Harvard University, believes that Trump administration's policies from immigration to trade to deregulation, which he has helped create, are disinflationary. This contrasts with many of the Fed who believe the president's tariffs could lead to higher inflation. If the Senate were to confirm Miran in a time for September 16-17 policy meeting and the full committee is not convinced to lower rates at the time, Miran would likely dissent in favor of cutting rates. That would mark 3 on the committee who could dissent. Fed Governors Christopher Waller, Michelle Baumann, with both dissented at the July policy meeting, preferring to lower rates by 25 basis points. Miran's Mar-a-Lago Accord favors a weaker dollar. Miran favors a weaker dollar as a way to offset higher inflation from tariffs while also increasing its exports, narrowing the trade deficit and boosting growth. He is the author of what he dubbed as the Mar-a-Lago Accord, a reference to the 1985 Plaza Accord that succeeded in depreciating the dollar's value. The Mar-a-Lago Accord seeks to devalue the dollar while retaining the greenback as the world's reserve currency. As one who favors a weaker dollar, Miran favors lower interest rates, which could lead to a weaker dollar if U.S. rates are lower than the interest rates of other central banks around the world. The president has pushed for a 3 percentage point drop in the Fed benchmark policy rate. Investors will watch for how much Miran will push for the policy rate to drop if confirmed. Miran wants a less independent Fed. Miran has advocated for major changes to the Fed. In a paper co-authored in 2024 with the now Chief of Staff of Treasury Secretary Scott Bessent, Miran called for an overhaul of the central bank by Congress that would give the White House more control over the firing of Fed governors, as well as not allowing Fed governors to serve in the executive branch for 4 years following their term as governor. He also argued for subjecting the Fed's independent budget to congressional appropriations. The proposals for allowing the president to dismiss Fed officials at will have stirred fears that the move could politicize the central bank and push the Fed to make policy according to the whims of the political cycle and not the economic cycle. That's very dangerous, in my opinion. But as well as not allowing Fed governors to serve in the executive branch for 4 years, I mean, I kind of agree with that. Like this part, I agree. You know, that makes sense. There should be a cool-off period. Anyway, not everyone on Wall Street is convinced a cut is coming. But even as the market abruptly shifted expectations, the probability of September cut jumping from close to 40% last week to more than 90% Thursday, some prominent observers believe the Fed won't act at all this year. In an uneasy context of stalled labor market, that's a contrarian take, but it's one that draws its power from an inconvenient truth. Inflation is stuck above target. Despite the labor red flags, Bank of America economist Aditya Behave doesn't believe the Fed will cut at all this year. His call runs counter to what many on the market observers are banking on, and it's a reminder that nothing is guaranteed because so many economic indicators and policy currents are in play. In a note this week, Behave explained that the Fed's decision not to cut would be influenced by stagflationary pressures, and that even as the labor market revisions cast even more negative spin on jobs growth, the Fed is still more offside on inflation compared to labor. I agree. If it were to cut in September, it would be putting a lot of faith in the forecast of labor market deterioration with no evidence that inflation has peaked, he wrote. The market does not agree. As of Thursday afternoon, the CME FedWatch tool, which uses futures data, showed more than 90% chance of a rate cut on September 17 and just a 0.6% chance of no cuts by December 10. Behave's case doesn't seem quite as outlandish when you also consider the Fed timeline. Policymakers won't meet again for another 6 weeks, leaving room for another round of mind-changing numbers to complicate or fracture market consensus. But the no-cut take also comes as more officials inside the Fed have expressed a desire to start slashing. For the first time since 1993, 2 Fed governors dissented from the decision to keep rates unchanged, and on Thursday, President Trump said he would nominate Stephen Miran, current chair of President's Council of Economic Advisors, to the Fed Board of Governors. Miran's appointment would add another Trump administration official to the Fed board and likely another voice calling for cuts. And last, Ethereum pops about $4,000 after Ripple Chainlink lead altcoin rally early Friday. Ethereum surged north of $4,000 early Friday to near its highest level of the year to pick up from a broader altcoin rally that had been led by Ripple and Chainlink earlier in the trading day. Altcoins were rallying early Friday following news that Ripple would buy a stablecoin payments platform and Chainlink will launch a funded reserve for its own tokens. Ripple's XRP was up as much as 8% early Friday. Chainlink's Link rose as much as 11%. Ethereum and Solana were up more than 1%, more than 2% respectively before the equity market opened on Friday morning. And on that note, thank you very much, everybody. Enjoy your weekends, and I will chat with you all next time.